to the CLS Market Outlook for the second quarter of 2016. I'm Todd Clark. In this report, we will review how CLS portfolios performed in the first 3 months of the year. Next, we'll look at the current economic environment with our Chief Investment Strategist. Finally, as part of our investment themes, we'll sit down with MSCI to discuss smart beta. To begin, please welcome our Chief Investment Officer, Rusty Vanneman. Rusty?
CLS portfolios performed relatively well in the first quarter. Our belief in building risk-budgeted, globally balanced ETF portfolios to help investors succeed was rewarded in the first 3 months of the year. Risk budgeting worked. Global worked. Balance worked. Risk budgeting proved its worth in the first quarter as CLS portfolios' risk characteristics met or surpassed investor expectations. CLS's overall portfolio risk management, primarily driven by our proprietary disciplined risk budgeting methodology and fortified by additional portfolio-based, returns-based, and factor-based risk analysis, contributed to CLS portfolios losing less than the overall market during the correction early in the quarter. It's been difficult to remain a dedicated global investor in recent years, but our global focus in the first quarter served us well. International markets performed better than the domestic, especially emerging markets. Our flexible asset allocation approach, helping create appropriately balanced portfolios for over 35,000 investors, also performed relatively well to start the year. The bond market, for instance, again posted impressive gains in the first quarter, surprising many yet once again. Other diversifying asset classes, including commodities and alternative asset class segments and strategies, also outperformed the overall global stock market during the first 3 months of the year. It was notable that commodities, after getting hammered in recent years and early this year, staged a nice rebound into quarter end. As asset allocators, we believe in balancing risk and return requirements through balanced multi-asset portfolios to help investors attain desired results.
Thank you, Rusty. Each quarter, we hold a CLS Investment Committee meeting, which has a dual mandate. First, it is the official keeper of the CLS Risk Budgeting White Paper, our foundational investment management document. Second, it manages the CLS investment themes, which every CLS portfolio is built around. Last quarter, Raman Subramanian from MSCI, whom we will hear from later in our program, joined our meeting to provide insight on a variety of topics. Here to review and discuss how this insight is shaping our perspective of the current economic environment is our Chief Investment Strategist, Scott Kuby.
In our meeting with Mr. Subramanian, he introduced a wealth of material, including this chart to my right. This example serves as an excellent frame of reference for thinking about domestic and global economies. Using the growth inflation data, this chart creates 4 economic environment quadrants. Rising inflation and rising economic growth is heating up. Rising growth and falling inflation is Goldilocks. Falling growth and falling inflation, like we have now, is slow growth. Rising inflation and falling growth is stagflation. Each box has a percentage which represents the amount of time the economy has spent in the quadrant since 1976. Slow growth, what we're in now, has occurred 32% of the time. The current environment is consistent with our economic outlook in recent years. This impacts how we position some portfolios and how we look at factor investing, which is part of our X factor theme. However, our in-house discussions are starting to lean towards an uptick in economic growth and inflation.
Thank you, Scott. Our X Factor theme, focused on smart beta ETFs, continues to be a much discussed topic at CLS. Currently, we have approximately 1/3 of our assets invested in smart beta ETFs. This compares to the industry average of 20%. Expect this emphasis to continue, if not expand. Following our investment committee meeting, we sat down for a special interview with CLS portfolio manager Joe Smith.
Thank you very much. I'm joined by Raman Subramanian, who is Managing Director and Head of Equity Applied Research at MSCI. Raman, thank you for joining.
Thank you.
So, as you probably know, in terms of 2016, we've adopted one of our major investment themes to focus on X factor, or essentially a focus on smart beta investing, and more specifically, the utilization of factor-based ETFs. Just to kick off the conversation, tell me a little bit more about what is a factor, and why is it important in terms of overall investment activity?
Thank you, Joe. So when you look at a group of stocks and look at the characteristic of those stocks, those are defined by factors. And in the long run, academic research has shown that these characteristics of stocks help to explain the risk and return. So factors are very crucial and critical to explain the long-term equity portfolio performance of not only equities but also other asset classes. So if they are very crucial, investors should really understand what kind of factors they are exposed to, because that will explain the risk and return of their portfolio.
So it almost sounds like then it's this whole business with factor investing is just another way of how you can go about analyzing, assessing, and then managing risk in your portfolio.
There is a linkage of factor performance to the overall microenvironment.
Right.
So for example, if the overall economy is not doing well, people get to become defensive. So defensive factors like quality or minimum volatility tend to do better. But if there is an overall growth in the economy and people are a little bit more optimistic, certain factors like value and low size will tend to do better. So that's one way of thinking, that if you have views on how the market is going to behave and perform, you can definitely tilt your portfolio to those factors. But if you want to be a little bit more cautious, a multi-factor approach which diversifies across multiple factors is something which investors should consider.
That's certainly great insight. I know, especially, internally for us at CLS, that's certainly both in terms of the single factor and multi-factor consideration we have been deploying in our portfolios. So,
thank you, Joe.
Thank you, Raman.
Thank you.
For more of our interview with Mr. Subramanian, visit the CLS blog. Over the next few weeks, we will release expanded segments on the topics discussed today. Now, to complete our look at CLS investment themes, we turn once again to Rusty Vanneman.
Thank you, Todd. In addition to our X-Factor theme of smart beta, we're also focused on international opportunities and creative diversification. International markets are on sale, and expected returns are substantially higher. Our own proprietary in-house expected return tool suggests that international ETFs should outperform by as much as 5 to 10% per year over the next 10 years. In a low-growth world, valuations, yields, and monetary policies play greater roles, and international markets are more likely to benefit from these factors than the U.S. Currently, in international markets, valuations are lower, dividend yields are higher, and central banks are providing greater support. Our final theme is creative diversification. Given the low level of interest rates, we continue to be creative in how we diversify our equity-dominated portfolios. We can do this in two ways. First, we can be tactical in our fixed income exposures, which we have been. Currently, our portfolios are less interest rate sensitive than the overall bond market. Though we have made tweaks in recent quarters, some that have helped and some that have not, this has been a consistent view in recent years given how low overall interest rates are. Second, we can use alternative asset class segments and strategies, which can include managed futures, hedge fund strategies, and currencies. We continue to slowly build positions in various alternative areas. This could also mean increased exposure to commodities, which we discussed at length in last quarter's market outlook. Finally, a key part of our creative diversification theme is our significant, perhaps aggressive compared to many other ETF strategists, use of actively managed fixed income ETFs. In this quarter's written outlook, I provide an expanded look at our fixed income holdings and what many consider to be the bond market benchmark, the Barclays U.S. Aggregate. There are a number of key points I encourage you to read in this report. However, at its core, it is important to remember that at CLS, we don't want our overall bond exposure to just equal the AG. We want a larger investment universe for our bond exposure. A larger universe means more opportunities to enhance returns and to diversify risk. Thanks for watching. Stay balanced.
Thank you, Rusty. That concludes our outlook for the second quarter of 2016. Our next market outlook will be in July. Also check back with us at the beginning of each month for our monthly market review, through which we'll give timely updates on portfolio positioning and how we're specifically applying our investment themes. From all of us here, thanks for watching. I'm Todd Clark. Thank you very much for your time and trust in CLS Investments.